Hello everyone, welcome to another episode of Loan and Insurance Explained. In this channel, I basically discuss different insurance types and different loan types a person need in his daily life. From the very childhood, every person has some dream to build a house for him and his family. But it is not possible for everyone to build their house with their own money or with their own earnings. Here comes the home loan. With home loan, a person can easily make a house or buy a house and repay the payment within 30 to 40 years. In this video, I'll discuss different types of home loans, how to achieve those, and how to repay those home loans in a very smart and effective way. You know, there are different types of home loan companies out there who provide their loan to you to make their business. It is your duty to reduce your expenses and take the loan and repay them in a very smart way so that you don't lose much. Let's discuss with some graphical views so that it's very easy to understand to every one of you.
When people take out a home loan, they do so with the best intention of repaying it as per the lender's instructions. Then somewhere along the line, life gets in the way, and that's only natural. Let's have a look at the life cycle of this particular home loan. These people borrowed $300,000 over a 30-year loan term at 5% interest. Their monthly repayment is $1,610. When they reach the 7-year mark, they decide they'd been struggling far too long with the extra money that they had put onto their credit cards to cope with managing their life. It may have well been the children and education, renovations or a new car, or any other expense that they now find far too difficult to cope with. So they approach the bank asking for a $50,000 loan to consolidate all of the outstanding expenses. The lender says to them, that's not a problem because during the past 7 years you have kept up all of your payments and the property has actually increased in value, so we are happy to lend you the extra $50,000. However, the interest rate on $50,000 in a personal loan is at 10%. You could do much better if you were to refinance your existing home loan and absorb that extra $50,000 into it. You will hardly notice the difference in repayments and you'll have no outstanding other debts. The couple agreed to this because it makes sense. This is a common scenario for many people, and 7 years seems to be a common number. But is it such a good deal? Let's have a look at this. Since the loan started 7 years ago at 84 months and they have met each payment of $1,610, in total they've paid $135,240, of which $36,164 was the principal. That means that $99,000 was paid just in interest. Now they're going to refinance their existing balance of $263,000 and add an extra $50,000 to that, which will take them to a total of $313,000. The new repayment is only going to be $1,680.25 per month. Seems like a good deal for an extra $50,000, doesn't it? Does this make sense? Let's travel a little further down the track another 7 years. Once again, they find themselves struggling to meet their commitments because they didn't learn from the last example on how to manage their money. They racked up extra expenses again and are approaching the bank for another $50,000. By now, they pay $140,000 in total, of which $37,700 has come off the principal and $103,400 has gone towards the interest. And the bank says to them again, you've made all of your payments and you've got equity in your home and the value of your home has gone up. So we are happy to lend you more money. Because of the lower interest rate, it's far more attractive to refinance your home loan and include the $50,000. Have these people really got a good deal, or could their lender offer them better advice? You see, the first time they refinanced the $50,000, they lost time and money. They wasted $135,240 and 7 years of their life. The old loan had disappeared and they had a new 30-year term loan. And here they were about to do it again. If only they had been given better information about money management. By the time they had gone for their second $50,000, they could have possibly paid out the first home loan. By the time they've gone for their second extension, they have paid out more than $275,000 and lost 14 years of their lives. To find out how you can manage your money better and how to avoid getting caught in the need to refinance your home loan, I would recommend seeking money management education and guidance. Lenders are in the business of making a profit at your expense. You should be in the business of minimizing those expenses and maximizing your profits. Money Rules can show you how.
This is Frank. Today we will follow him through the process of getting a loan for his first home. Frank goes online to begin the process. He's asked for some information and documentation that he submits. Easy enough. Then Frank meets with his loan officer. She is the one who works with him throughout the entire loan process and finds the best loan for Frank's needs and gives him a quoted loan rate. Once Frank's loan rate has been determined and he agrees, it moves to the lock desk department. They confirm and lock in the pricing, terms, and interest rate. Frank doesn't interact with the lock desk, but based on what his LO has told him, he knows things are in motion. Next, Frank's loan goes to the disclosure desk. Their job is a pretty big deal because if any of the pricing or fees are not correct, Frank is starting to pack his belongings to get ready to move into his new house. He feels confident and excited since his LO is keeping him informed along the way. Speaking of Frank's LO, she's working through the process with the Originations Support Specialist, or OSS. The OSS does things like clean up the file and gather up as much required documentation before submitting it to the next step. This group is a big help to move the file quickly through the process. Setup desk. They order anything and everything that needs to be ordered from a third party. Things like appraisals, title work, payoffs, employee verifications, and insurance policies are this team's specialties, and they work to get these items quickly to move the process along. The processing team is up next. They receive all the orders, verification, and documentation needed for the file. The processor wants Frank to be able to move into his new house without a hitch. This group confirms all the information on Frank's application is true and accurate. Underwriter. They will determine the level of risk we have with Frank and his property. The underwriter reviews and approves all of the documentation used for the loan and issues the final loan approval once this is complete. This isn't always as easy as it sounds. The underwriter might have to get additional information from Frank through his LO or find solutions and alternatives without asking too much from him. All the while, Frank is packing and labeling boxes. He's already scheduled a moving van for the day after his closing. QA group. They are known as the gatekeepers. This team is a key component to preventing fraud. They want to get it right. The QA team reviews the loan prior to closing and after closing. We are getting closer to the end of the process. The next step is closing, who will finalize the costs of Frank's loan and works with a settlement agent to create the documents required to be signed at the closing table, where Frank will sign all of his documents in person or electronically. Once Frank closes on the loan, he can get his keys and start moving in. The funding group does a quick review of all the documents and they wire the money. Once everything is correct and they confirm Frank has signed all the documents necessary, they release the money to the settlement agent. They review all of the closing documents to ensure the loan was accurately completed. The post-closing group delivers the loan documents to the investor we sold the loan to. In post-closing, they also collect all of the final documents needed after Frank closes on his loan. Here we are at the final step in the process. Frank has his mortgage loan and has moved into his new house. Now, for anything additional Frank needs from the mortgage servicer, he will speak to someone in the servicing department. This team can look up Frank's information to answer questions, provide documents, refer him to the correct group for insurance claims, and many other tasks. This has been the full process for Frank to get his mortgage loan and live happily ever after in his new home. Congratulations, Frank.
If you find this video helpful to you, don't forget to hit the like button, share this video to your friends and family, and if you are new to this channel, don't forget to subscribe. And don't forget to hit the notification button beside the subscribe button so that whenever I upload a new video about loan or insurance, you will get the notification in first hand. Stay safe, stay well. Thank you.